Good morning. This is Rebecca Strauss again with Miller Johnson. This webinar is a follow-up to a webinar we did last week about the Ffcra and what that means for employers in 2021. Since that webinar, we received a number of questions about the interaction between the Ffcra tax credits and specifically FMLA and the extended FMLA. Also a few questions about emergency paid sick leave as well. One of the ways we decide whether to do a webinar is when we start getting the same question repeated times. So because we've gotten a number of questions on that, that's why we are doing this follow-up webinar. We hope it is helpful to you. This creates more questions than you might think at first glance. We will probably not be able to get to all of them, but we'll be able to answer a lot of them, particularly the most common questions we've been getting. Some of them actually were submitted by some of you prior to the webinar beginning. So before we get to the questions, let's go over a few of what I call the golden rules in this new era of the Ffcra having expired, but employers still being able to get tax credits for some sorts of paid leave that they may voluntarily choose to offer employees. So the first rule to keep in mind is the right to Ffcra leave is over. I think hopefully most of us know that by now, right? You can choose to offer leave that looks like Ffcra leave, but an employee is not entitled to it under federal law. Why did I put in parentheses for now? Well, since we last gathered last week, we now know that the control of the Senate is going to be split, but with the Vice President having the tie-breaking vote. The House is controlled by the Democrats, and of course, President Biden will be in the White House. So all of those things combined means that it's entirely possible for there to be legislative and presidential support for extending some sort of paid leave in the future. I haven't heard the chatter about it. I don't know what it would look like, but I think we should brace ourselves for that possibility. Okay, but right now, the Ffcra did expire on December 31st. Remember that organizations can offer paid leave that is less than, equal to, or more than what was required by the Ffcra. Because the Ffcra is not required anymore, your organizations, as I mentioned, can continue to offer it in a way that looks like the old Ffcra leave. But because it's not required, you can also offer paid leave that is less than what was required by the Ffcra, or you can offer paid leave that is more than what was required by the Ffcra. The most common question we've been receiving in this area is whether employers can offer leave that looks like paid sick leave, that 80 hours of emergency paid sick leave, without offering the expanded FMLA. And the answer is yes, right? Because nothing is required anymore. You can pick and choose. Okay, the next golden rule I want you to keep in mind: the federal government will help you pay for the paid leave if the employee would have qualified for Ffcra if the Ffcra had not expired. That's a really long sentence, and it has two ifs in it, which makes it confusing, but this really is the golden rule of the new era from now until March 31st. We got a question in about public bodies and public schools being eligible for the tax credit. We got this question in before the webinar. Remember that public body employers are not eligible for the tax credit. They were not eligible in 2020. Nothing has changed in 2021, okay? So maybe a better way to put that is if you were not eligible in 2020, you still are not eligible. Nothing about eligibility for the tax credit in that sense has changed, okay? And because I should mention the rest of this webinar is about the tax credit, you can decide, right, whether to stay with us or not. I think this is all fun and fascinating, but others may not and may decide that it's not relevant. The third golden rule, this expanded FMLA. A lot of people say EFMLA. I've been guilty of that, but it's technically the EFMLEA, which is a mouthful. It is a part of the Ffcra. It's one type of leave under the Ffcra. It provided an additional qualifying reason for FMLA leave. Okay, that's a hard concept for a lot of folks to wrestle with. So I just want to let that sit for a minute. It was not an extra bucket of leave. Emergency paid sick leave certainly was. But EFMLEA, the expanded reasons, the expanded FMLA under the Ffcra, provided an additional qualifying reason for FMLA. But it did not provide an additional amount of leave, of FMLA leave, beyond the 12 weeks guaranteed by the FMLA. Okay, this is when it's hard doing a webinar instead of a live event, because if it was live, I would be able to see if you were all nodding along or not. I hope you are nodding along. This concept is really fundamental to a lot of the other things we're going to talk about this morning. And it's fundamental as you work through questions on your own, right? Whether someone whose leave your organization agrees to pay for, whether you can get the tax credit for that paid leave. Remember, it provided for an additional reason to qualify for FMLA, but the person still only gets 12 weeks of FMLA. It, of course, also did a few other things, right? It shortened up the qualification period, be eligible for this type of FMLA, and obviously it also required payment at 2/3 pay per day at a 200-day max. But for our purposes today, the important thing to remember is it provided an extra reason, the person to get their 12 weeks of FMLA. It's just another type of FMLA. Okay, lastly, before we get to the questions, beginning January 1st, 2021, do not deduct time that would have qualified for this emergency FMLA from an employee's FMLA bank. This is an issue we're seeing over and over with lots of organizations. So I do just want to pause here, and it's very hard for me to be quiet. It's not my nature, but I'm going to be quiet and just let us all read the slide together one more time. Okay, hopefully that is sinking in. Why are we not deducting this time from an employee's FMLA bank? It's because the Ffcra, the leave provisions, did in fact expire as of December 31st. Okay, so now if someone has a qualifying reason, let's just say a school closure due to COVID-19, there is no longer that expanded FMLA available to them. It is no longer an additional reason for which they can qualify for FMLA. Remember the last golden rule. It's another reason that someone could qualify for FMLA. It is no longer a qualifying reason for FMLA. Now, you may be able to get a tax credit, right, if you pay them for that time off. We're going to obviously talk about that in some more detail here coming up with the questions. But it's not actually FMLA time. Again, this is an area we see potential risk for organizations. So if there's one thing, right, you take away from this, if you want to write it down somewhere, pass it on to your teammates who are not on this webinar, please remember that point. Okay, let's move on to the interaction between the Ffcra tax credit and the FMLA, because this is really where it gets complicated. Remember, it's only relevant to one reason for leave, right? Childcare, school closing due to COVID-19, right? That's the qualifying reason that was added to the FMLA. Again, it's not relevant to most public bodies because Most public bodies can't get the tax credit anyway. If an employee needs leave for this qualifying reason, and your organization chooses to pay for the leave, your organization can claim tax credits for the amount it paid in leave, but only if the employee would have qualified for the Ffcra if the Ffcra had not expired. So these are the questions you need to ask yourself when an employee, again, I'm not focusing on reasons qualifying under the EFMLA for now, but remember the school closure, daycare closure it's a reason for expanded FMLA. It was also a reason for emergency paid sick leave, right? That counted for both. So if you have an employee who tells you they cannot work because of school or daycare closure, these are the questions to ask. Do they have, and I should mention also before we get to that, and your organization has said, we want to continue paying for time off in the same way we would have paid if the Ffcra had not expired, okay? Let's just assume that is the position your organization has taken, which is a pretty popular position, I understand from what I'm hearing. Okay, the first question is, do they have some or all of the 80 hours of emergency paid sick leave left? If they do, they can take up to the rest of those 80 hours. You can pay for it and then get a tax credit for that. If not, or if they finish up those 80 hours and still need additional leave, do they have FMLA time available? And for that, you look at their FMLA bank, right? That's a phrase that most of us are already familiar with, especially for those of us that have over 50 employees that have been working with the FMLA for a long time. If you are a smaller employer that has never had to work with the FMLA until now, that probably requires a private counseling call, right? Because we have to then get you through the concept of the FMLA bank. But there is this concept of the FMLA bank. You have 12 weeks of time per year. It can be a calendar year or a rolling year. And if they have FMLA time left in their bank, and you pay for this leave that they need because the school or daycare has closed, and they haven't used up all 12 weeks for EFMLA qualifying reasons, see the third bullet point, if you pay for their leave, you can take your tax credit. There is confusion, maybe confusion is the wrong word, but there is disagreement, and it's frankly right now it's unknown whether the EFMLA provides a separate 12-week cap on leave for EFMLA reasons. And the reason that can become relevant is once we get past an FMLA year and start another FMLA year. And now that this is impacting our lives and our organizations for so long and will continue to now, for a much longer time, that's starting to become relevant in a way it didn't feel important to discuss at the beginning of this, right, or even in the middle of this. Some folks, I won't get in and out of all of the legal arguments because I think what's important to you is the conclusion, which is it's an unknown right now. Some folks think that there is a 12-week cap on EFMLA reason for leave. So in other words, if a person took 12 weeks of FMLA in 2020 for all of it for EFMLA reasons, and you're an organization that reloads the FMLA bank every January 1st, so now as we sit here on January 12th, the employee's bank is back up to 12 weeks, and the kid's school closes again, can they take more EFMLA? There's a disagreement. Some folks reason that they can, but there's not a separate 12-week cap just on emergency Family Medical Leave Act reasons. It's, again, just another qualifying reason for FMLA, but that's it. Others, there's a regulation that implies that there is a separate 12-week cap. We are hoping for guidance on that from the Department of Labor. It's just, I hate in these things saying we don't know the answer, but the reality is we don't know the answer as we sit here today. A second reality is that most of you will not be faced with that issue. Right? Some of you may on an individual basis. I encourage you, if you have an employee who needs leave and you are faced with that very specific situation, to reach out in that moment and we can discuss what the best course of action for you is. Okay, let's get to some questions and then we're going to get to some examples. First question. If an employee used some FMLA in the past 12-month rolling year, and the employee now needs leave because of school or daycare closing, can the employer pay for the leave and claim a tax credit for the paid leave? The answer is yes, up to the amount of FMLA the employee has left in their FMLA bank. Okay. Let me get to a few other questions that were sent in prior to the webinar, but after I prepared these slides, so I did not have a chance to prepare a slide on these questions, but I still want to get to them. One question is, can we get the tax credit for an employee who is requested to go get a test because they were exposed to another employee? And then, and where I see the question, it cuts off. So let me, the answer to that depends on whether the person they were exposed to, the close contact, if you will, actually tested positive for COVID-19 or had symptoms of COVID-19. And it's very interesting because in this sense, the revisions to Public Act 238 interact with the Ffcra tax credit. So we have an employee who's not at work because of close contact. We want to pay for their time off. The question is, does it qualify for this Ffcra tax credit? The first question is, if the Ffcra had not expired, would this person have qualified? We automatically flip to emergency paid sick leave because it certainly wouldn't qualify under expanded FMLA, right? Because that's just for school or daycare closures. So we're not in that world. We're in the emergency paid sick leave world. And in that world, you can qualify for that type of Ffcra if there is a federal, state, or local quarantine or isolation order requiring you to stay home. Under revised Public Act 238, that's a Michigan law, under revised Michigan Public Act 238, an employee must stay home after close contact with a person who tested positive for COVID-19. Okay, so that person under 238 should not go to work. Therefore, if Ffcra had not expired, they would have qualified for paid sick leave. Therefore, assuming they haven't burned through their 80 hours yet of paid sick leave, because they only get a total of 80 hours no matter what, assuming they haven't burned through all of that, you can provide them paid leave up to a maximum total of 80 and then claim the tax credit. Now, let's flip to another scenario. If the employee cannot work because they've been in close contact with a person who has COVID-19 symptoms, the way that Public Act 238 was revised, that's an entirely different situation now. And this is a change because prior to the revisions over Christmas break, it was close contact with a person who tested positive or was symptomatic. Now the world looks very different legally. Now that person is not required to stay home. They're only required to stay home if they had close contact with a positive case, someone who tested positive. If they were in close contact with someone who had symptoms, they are no longer required to stay home. Therefore, they're not under any federal, local, or state order, right, that's requiring them to isolate or quarantine. Therefore, they probably would not qualify for emergency paid sick leave. One last caveat to that question. Whoever asked that question probably thought that was a very simple question, but it's actually a very interesting question because it opens up a lot of possibilities. Another reason you can qualify for paid sick leave is if a healthcare provider told you to quarantine or isolate. So even though Public Act 238 was changed, if that employee's healthcare provider told them, you've been in close contact with a symptomatic person, and in my medical judgment, that is a situation where you should stay home until you are tested one way or another, right? Go get a test, and if it comes up negative, fine, you don't have to quarantine, but if it comes up positive, obviously you do have to isolate. If that is the advice that their healthcare advisor, which is entirely possible, their healthcare provider, then they would qualify for emergency paid sick leave had it not expired. Therefore, you can provide the paid sick leave up to a total of 80 hours and claim the tax credit. I hope that all makes sense. Again, this is when it's hard on a webinar because I can't see your faces, but hopefully that makes sense to all of you. We have a question about reporting this paid sick leave on W-2s and how to do that. Does it get reported on a W-2? And I'll just expand that question. And if so, in what box? At the end of the Ffcra, there's a little bit that doesn't get a lot of attention, but it says any wages required to be paid by reason of the Ffcra shall not be considered wages for purposes of Section 3111A of the Internal Revenue Code and 3221A of the Internal Revenue Code, that's Social Security and Medicare. That section was expanded in the legislation that passed Congress at the end of December. So any wages that you pay that would qualify for this tax credit would also qualify under that section as not being considered wages for Social Security and Medicare. But that is where my expertise ends, unfortunately. This is a question for your accountant. Please ask your accountant how to report those wages on the W-2 or not, and if still on the W-2, in what box. It is conceivable to me that it would be reported differently than all the other wages that employee earned that year. But that is, again, beyond my area of expertise, so I encourage you, again, to talk to your accountants about that. But even though I don't have the answer for you, I really like the question because it raises the issue for everyone, something that lots of folks may not have even been thinking about, okay? Next question. Public schools do not qualify for the Ffcra tax credit and paid leave, correct? My understanding is that is correct. There is an exception in the Ffcra for any government or any subdivision thereof. And as my partner Bob Schindler explained on last week's webinar, school bodies are considered a division thereof and are not eligible for the tax credits. The simpler way I would put it is the Ffcra has been here since April 1st. Your organization, your local school district, your whatever public body, we have other types of public bodies as clients that attend our webinars, whichever one you may be a part of, my guess is folks in your organization have determined a long time ago whether your organization is eligible for the tax credit. If you are not eligible because of that provision I just stated, if you are not eligible all the way through 2020, you are not eligible now. Nothing about that has changed. Okay, one last question that came in, and then I'll get to the examples on the slides because I do want to get you all on your way. If we decide to still give employees the paid leave, do they have to request PTO days or other leaves we offer? Or does the 10-day, and then again, for whatever reason, the question on my sheet cuts off. So let me just address that in a general way. For emergency paid sick leave, remember when it was in effect, employees were entitled to get that before any other kind of leave, right? So if they had, just pick a number of amount of hours in their PTO bank, let's just say 40, they had 40 hours sitting in their PTO bank, and then they couldn't work because of a reason that qualified for emergency paid sick leave, then they got the emergency paid sick leave 80 hours first, and then after that, the 40 hours on top of that. So if you want tax credit for paid leave, you'd have to give the employee paid leave in the same order, okay? Same order. All right, now let's get to some examples of how this works, particularly with the interaction with the FMLA, because again, I think that is one of the most complicated parts of the new law. Let me see if I can get the slides to advance. Yes, I can. Okay. Example one. By the way, all my examples are going to use the calendar year for FMLA just because it's easier to use in examples, but the same concepts apply if it's a rolling year. In 2020, an employee used 8 weeks of FMLA for a regular FMLA reason, right? And then 4 additional weeks of FMLA for an EFMLA reason, right? School or daycare closure. Okay, that's in 2020. They used up all 12 weeks for those 2 reasons. Now, the employee cannot work for an EFMLA reason, and they are not sure how long they will need the leave. What do you do? And again, we are assuming in these examples, we are assuming these are employers who said, we want to extend paid leave just as if the Ffcra had not expired. Okay? These examples apply to that universe of employers, and we are discovering that's a very large universe of employers, the majority. Okay, so if you want to pay for the leave, get the tax credit, here is the result. You can claim the tax credit for 8 weeks of paid leave. An employer should not count the 8 weeks as FMLA and should not deduct it from the FMLA bank, right? Because that EFMLA, that additional reason for FMLA, has expired. So that employee, right now, they're taking leave that would have qualified had it not expired, but it did. So that time is not deducted from their FMLA bank. I said at the beginning, this is a calendar year, right? So 12 weeks reloaded on January 1st. Why do I say they can claim a tax credit for only up to 8 weeks? This is assuming that there's a total of a 12-week cap on EFMLA reasons. As I said, there's a debate about that right now. That is the more conservative view, right? That is the more conservative view. So assuming that there is a 12-week total cap for EFMLA time, they already used 4 in 2020, they get another 8 in 2021, and they can take that other 8 because they have that much time in their FMLA bank to use. Okay. Example 2. The employer uses the calendar year again for the FMLA. Employee used 12 weeks of FMLA in 2020, all for non-EFMLA reasons. Okay. Now, in January, the employee cannot work for an EFMLA reason and may need leave for a while. We're not sure how long. Okay. What does this employee, what type of paid leave can you provide this employee and get a tax credit for? You can claim the tax credit for up to 12 weeks of paid leave for the EFMLA reason. That's because their FMLA bank reloaded January 1st, so they have time in their bank, right? And they've used no EFMLA time yet. Therefore, we don't have to worry about whether there's an additional 12-week cap on EFMLA. Reminder again, this is not actually FMLA because the EFMLA did expire, and you should not deduct this time from the employee's FMLA bank. Okay. Example number 3. Again, we're using the calendar year. In 2020, an employee used 2 weeks of emergency paid sick leave, not for school or daycare reason, for another reason, and then 10 weeks of FMLA for an EFMLA reason. The employee did not use any additional FMLA for any other reason. Now the employee needs 2 weeks because they're for an EFMLA reason because their school or childcare has shut down because of COVID-19. What is the result? The employer can claim the tax credit for 2 weeks of paid leave because, first of all, they have FMLA in their bank now, right? It reloaded in January, and there's no indication well, obviously they couldn't have used 12 weeks because it just reloaded. So they have time in their FMLA bank, right? They did not use up all 12 weeks of EFMLA in 2020. They only used 10. And assuming there's a total cap of 12 on EFMLA, they can take an additional 2 weeks. And again, do not deduct the time from the FMLA bank. That is what I have for you this morning. I am trying to keep the employment law webinars to about a half hour these days. We appreciate your attendance and attention. If you have any follow-up questions, please let me know. I hope you all have a wonderful day. Thank you very much.